Good morning, trading world. It is October 31st, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. Will FOMC this week be a trick or treat? Let's take the time to look at the market watch ahead. Tuesday is the first of the month, so new fund flows. This could kind of hold the market up a bit. Wednesday, we have FOMC announcement. This could be the start of a real slide down. Thursday, jobless claims. Then Friday, we have PPI. We have a gauntlet of market moving reports this week. Now, if you've been watching for a while, I have been waiting on the 391 to 395 area on the SPY as the start of a possible swing short. We are close. Waiting on that swing short is a test of patience. Let's get into the key levels to watch for the day. All right, here we are back with the key levels of the day. Starting on the support side, we have our Jack support at 386 to the 385 area, Queen support 384 to the 383 area, and then King support at the 382 down to the 377 area. On the resistance side, we have our Jack resistance 388 to the 389 area, Queen resistance 390 to the 391 area, and then King resistance, at 393 to the 394 area. The main thesis for today is bearish, closing below the 389.02 with a projected target low of between 388 and 377. The alternate thesis is bullish, closing above the 389.02 with a projected target high of between 389 and 394. The current major channel we are in is 379 all the way up to 397. The major channel below is 379 down to 364. There is a chance we could hit the top of the major channel 397 at some point this week. We have harmony between the technical side, which is bullish, and the quant side, the technical side, which is bearish, and the quant side, which is bearish as well. I am looking for a drop in market strength today, or more so overnight, to give us room to go a little higher late Tuesday into early Wednesday. Wednesday will be very exciting given that is FOMC day. The weekly outlook is bearish, closing below 389.02 with a possible retracement of 379. That brings us to the scenarios of the day. All right, here we are back with our first and most probable scenario. It's going to be our trend day down. We open, gap down, and start with a pop back towards the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day, better known as our golden window, the best time to trade. We find midday chop around either the possible queen or king support area. The second half of the day, we usually start with a head fake looking to continue the primary trend of the morning, but at some point we get to a kind of pop or rally into the close. So that is our trend day down day type structure. All right, here we are with the second scenario, which is going to be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same energy or force we went down with the first part of the day. I Also want to alert you to a vice versa scenario, which could play out as such. Instead of a continued push lower, we start with a continued push higher. Find our midday chop somewhere between the Jack and Queen resistance level. And then start the second half of the day with a fade using the same energy or force that we came up with the first part of the day. We'll go down with that same amount of force. So that is our rounded reversal day type structure, and that's the vice versa alert. Alright, here we are with the last scenario, which could be our expanded range day structure. We could have an initial pop higher, find resistance, and chop back and forth before getting a midday fade and still try to spike back to earlier highs in the day. So that's our expanded range day structure. Those are the scenarios that I will be planning for. I hope this helps. Again, we have a gauntlet of reports, market moving reports on the week. So there's no doubt that we will have lots of opportunity and big movements on the week, especially with FOMC coming. Again, our most important job as a trader is to protect the capital that we already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to account size. I'd like to close the video by wishing you a positive trading day. Let's go out and make it a great one.